Hello everyone. Good morning to all. Welcome everyone in this session. Everything is okay? Let me confirm. All right. So today we have to start module C. Yesterday we completed module D, a few questions, 35, 36 questions we did yesterday. And today also we'll do 35 questions in module C. Now, so first question. Read the question properly and give me the answer. So you have to find the correct statement. Which of the following statements about loan policy of a bank are correct? So it defines the bank risk appetite, that what is the risk level, then acceptable collateral, what security the borrower has offered, and sectoral lending limits means every sector they have their certain limits. Yes. Now, this policy is revised monthly because you are giving the loan. So you will check once, okay, the policy of the all the loan policy, all the terms and conditions. So it is not revised monthly, it is revised annually. So this is wrong. Now, it serves as a reference for compliance. Yes. So 1 and 3 are correct. Option B and 2 is incorrect. So this is wrong. It is not revised monthly. It is revised annually or when the period is divided, when the regulations are being changed there. Now, question number second. Question in terms of forfeiting and factoring. So yesterday only we completed this topic. Five statements are provided to you. You have to find the correct option. What it says, yes, correct answer A. Factoring means what? It is used for domestic and international receivable. It is okay. It can be used for domestically also as well as import and export. But forfeiting, it is only used in case of export, international transactions. Factoring, it can be recourse and without recourse. So the one who is taking the risk, okay, that is any bank or any factor could be any bank, any financial institution. So this factor has the right that it can, if any default is done, then it can go back to the seller or not. But in forfeiting, it is always without a recourse. Now, bank or factor will not have any kind of right, but here the factor is provided the right that it can either recourse it or it can without recourse it. So all the four statements are correct. Now in forfeiting, what it says, the exporter bears the risk. Do exporter bears the risk or bank bears the risk? The buyer's default. That is why the statement is incorrect. Okay, so it is fully taken by the financial, any factor or any bank. So that is why statement 5 is incorrect. Now, next, question number third. Give me the answers. The question is letter of credit. Five statements are provided. Letter of credit is what? It is issued at the request of buyer, and who will issue? Bank will issue for international transactions. Now, it is a guarantee payment to the seller if documents will match all the terms. Yes. LC removes all the risk of a buyer. Do LC removes all the risk of the buyer? No. Not all risk is removed. It is governed under which rule? By UCPDC 600, yes. And it is a guarantee given by the seller to the buyer. It is a guarantee given by the bank, okay, to the seller. So 1, 2, and 4 are correct, and 3 and 5 are incorrect. Option A. Okay, so LC does not eliminate all kind of risk, and it is a guarantee given by the bank, not the seller. So not all the statements are only 5 is correct, 1 to 4 are correct. Okay, you have given all 5 statements are correct. No, the third and fifth one is wrong. See, I told you that you cannot completely eliminate risk. You can mitigate a risk, you can minimize risk, but you cannot completely eliminate a risk. And it is the guarantee given by whom? By the bank to the seller. Now, question number 4. Inventory turnover ratio. What is the formula of inventory turnover ratio? Cost of goods sold by average stock. Now, question says furniture company is selling the furniture for office building, and current year Raju reported how much cost of goods sold? That is 25 lakh. And its beginning inventory was 40, ending inventory was 60. Now, how to calculate average stock? Opening plus closing divided by 2. 40 plus 60 lakh divided by 2, so it will be your 50 lakh. And how much is your cost of goods sold? 25 lakh upon 50 lakh. So it means 0.5. It means that you have your inventory in your godown round about 50 lakh rupees. But you have used only 25 lakh rupees. Means still you are left with, you have used only 0.5 percent of your stock. Okay, from one you have used only 0.5, or from 100% you have used only 50% of your stock. That is why inventory turnover ratio means what is left? 0.5. Option C. Yes, it's C. So it suggests that inventory turnover is once every 2 years, which suggests slow movement of goods. Means every year you are selling 0.5, 0.5. So if you want to sell your 100% goods, then you have to wait for 2 years. That is, there is slow movement of goods. Now, 3 statements are provided. So as of April 2025, what is the limit for housing loan to individuals in metro areas, in non-metro areas, or when the population is less than 10 lakh? So in metro centers, when the population is equal to greater than 50 lakh, and to qualify under PSL, how much is the loan amount? That is up to 50 lakh. So 50 lakh is provided as PSL, but one condition is that the cost of the dwelling unit should not exceed 65 lakh. Means the cost of making the house should not exceed to 65 lakh. Then only loan up to 50 lakh is provided as PSL. And that to population should be equal to or more than 50 lakh. Now, statement 2, this is correct. Statement 2, in urban centers, when population is between 10 and 50 lakh, then how much loan limit is provided? 45 lakh under PSL. Whether the cost of dwelling, it should not exceed 60 lakh. So here it should not exceed 65, here it should not exceed 60. This is also correct. Now, loans to bank own employee are included? No, these are not included. So that is wrong. So 1 and 2 are correct. Now, next. When the loan limit is at 35 lakh, dwelling unit cost should not exceed 45 lakh, then in which center it will come? Metropolitan center, urban, other center, or none of the above. When the population is, see, we have just done population greater than or equal to 50 lakh. It's the limit is 35 lakh. No, this also we have done now. What is left? Other centers when the population is less than 10 lakh, including semi and urban rural areas. So options. Now, so these are all the limits of PSL. Later on, download the PDF and go through all the slides, the explanation slides. Okay, so it is 50 lakh overall cost of dwelling should not exceed 65 lakh. When 10 to 50 lakh population is in urban areas, loan limit is 45 lakh. Overall cost of the dwelling should not exceed 60. And in other centers, when the population is less than 10 lakh, then loan limit 35 lakh is provided under PSL, where 45 lakh is the last limit of the dwelling unit. Now, 7. So MCLR, it includes marginal cost of funds, yes, negative carry on CRR, yes, operating cost and tenor premium. So these are the four things that are included in MCLR. Now, if negative MCLR arises, means bank earns no interest on CRR, yes, means bank is RBI is earning no any kind of interest. Because why? Because CRR ratio, it is the ratio that is the bank, they have to keep reserves in the form of cash with RBI. So so bank will not going to earn any kind of interest if it is negative. Yes, this is also correct. Now, tenor premium depends on the individual borrower risk rating. Okay, just hold this statement. Now, operating cost, it includes cost of running the bank and loan processing. Yes. Now, next statement 5, tenor premium cannot be borrower specific. Now, if you will see that statement 3 and 5, these are contradicting each other. So either 3 will be correct or 5 will be correct. So we know that 1, 2, and 4, these are correct. Now, from 3 and 5, what it says, tenor premium depends on the individual borrower risk rating. So, it only depends on individual borrower risk rating. It depends on the for how much period of time the borrower is increasing its loan. Okay, borrower is taking refinance. So, on all these factors, the tenor premium depends. It not only depends on individual borrower risk rating. So, it cannot be borrower specific. Yes, so this statement is wrong. So, 1, 2, and 4, 5. 3 is incorrect. Alright, D is the answer. Now, next is co-acceptance of bill. Again, two contradictory statements are provided in this. So, in co-acceptance of bill, both will sign. The bank signature will also be there along with the buyer signature. Now, banks co-acceptance act as a guarantee to the supplier. Yes. Co-acceptance helps the buyer reduce working capital needs. Now, co-acceptance below 10,000 must be signed by two officials. If co-acceptance, the limit is below 10,000 or it should be more than 10,000, then the signature of two officials are required. So the signature of two officials are required when the limit is above 10,000. That is for bills above 10,000, co-acceptance requires two official signature. So 1, 2, 3, and 5 are correct. Now, NAC committee or PAT method. So 5 statements are provided now. So what this NAIC committee, this method is basically for MS, micro small enterprises. Now NAIC committee method and the operating cycle method. So higher of the value we will consider. And what RBI says that for every micro small enterprises, for their working capital need, what they have for financing the working capital needs, they need 20% of the amount. Okay, and 25% of the amount is needed when the enterprise will bring 5%. So the bank will only provide you 20%, rest of the 5% enterprise will have to bring for financing its working capital. So working capital is equal to 20% of projected annual turnover. Yes. Now operating cycle method, it see this method entirely it depends that how much time you will take to complete one cycle of your working capital. Means you will what is working capital cycle? The cash will be there. Now from that cash you have purchased raw material, work in progress, then finished goods, then sales, then debtors, and then cash. And again, from that cash, you will purchase raw material. So this cycle goes on repeating. Now, how long it takes to complete one cycle? So that is our operating cycle method to convert raw material into cash. Now, the higher of the from these two methods, the higher value you will consider, but that higher value should be up to rupees 5 crore. If it is more than 5 crore, then the low value would be calculated. Like suppose from this operating cycle method and PAT method, your value comes 6 crore, and MSME is it is written up to 5 crore. So how much MSE would be provided the loan financing? That is 5 crore. Okay, if you're working operating cycle method and PAT, if it comes like 4 crore. Okay, PAT comes 4 crore, operating cycle method comes 3 crore. Now, and 5 crore is the target. Now, which one is higher? So, higher is 4 crore. So, that is 4 crore would be provided as working capital limit. So, higher of these two, either PAT method or operating cycle method. But it should be up to 5 crore, not more than that. Now, so it is ignored? No, it is not ignored. It is considered. NAIC committee it was introduced to improve credit flow. Yes. So again, 1, 2, 3, and 5 are correct. Option A. Yes, correct. Option D. Now, who is financial creditor? So there are two types of creditor. One is financial and one is operational. Now, let's have a quick overview of these two. Now, these creditors basically we use financial and operational words in IBC 2016 chapter. Now, financial creditor is the creditor, a person or institution who has lent money to the company. So this could be any bank, any NBFC, any financial institution. Now, operational creditor, these are those creditors who have supplied the goods. Like I have supplied goods to any company, but the company has not uh, uh, repaid my money back. Okay, or I'm not unable to recover my money from the company. So I will be operational creditor for that company. So a person or business who has supplied goods or service to the company. Nature of debt, it's a financial debt because the bank it will provide a large sum of money, and banking sector is what it is said to be a crucial sector in terms of finance. So money borrowed against the time value, that is financial debt. And here operational debt. Why? Because the supplier has provided you the money for your day-to-day activities, for your day-to-day operations. So unpaid bills, rent, wages. So these will come under operational debt. Like bank, financial institutions, and here suppliers, employers, any landlord, okay, any third party. And again, it carries interest. It does not carry any amount of interest. Now, what is the role? So, in under Section 7, the CIRP can be initiated and it is included under Section 9. Now, so who is financial creditor? So, a person to whom a financial debt is owed and include a person to whom such debt has been legally assigned or transferred to. Now, next. Debt equity ratio. Debt equity ratio. So what is the formula? Debt upon equity. So in debt, all the long-term debts will be included, and in equity, all your equity preference shareholders. So in debt, if you will see that only one long-term debt is provided to you, that is 50,000. So debt we have how much? 50,000. Now in equity, we will consider equity share capital, preference share capital, general reserve, reserve for contingencies, and sundry creditors. These are short-term liabilities, prepaid expenses. These are assets, and minus preliminary expenses. Now, why in equity we are considering all this? Because ultimately, whatever money is left in the company after paying all the liabilities, all the debt, the money, if even if you are keeping that money as reserve, ultimately that money belongs to your shareholders. So that is what, that is the owner's equity. So that is why we will consider the equity share capital, preference share capital, general reserve, and the reserve which you have kept aside for contingencies. So 1 lakh, 30,000, 50,000, 20,000 minus 5,000. Now calculate and tell me quickly. Minus 5,000. So it is 205,000. Now debt upon equity. So debt is how much? Debt is 50,000 upon equity 205,000. 5,000. So it is 0.2439. Okay, so it's to 1. So that is option C. Not D, it's C. 0.24 is to 1. Now, next, question number 12. A company produces a product with the following cost structure is there. Fixed cost, variable cost, selling price, and company wants to achieve a profit of 2 lakh. Now, how many units must be sold to so company can make the profit of 2 lakh? So first you have to find the break-even point. What is the break-even point? After that, you will use this profit to find the actual break-even point. Now, so before this 2 lakh, what is the break-even point is what? Break-even point, it is a situation where there is no profit, no loss. Means company has incurred zero level of profit. So it is fixed cost upon contribution per unit. This is what, this is when you need to calculate break-even point in units. Now, how to calculate contribution? That is sales minus variable cost. So 50 minus 25, how much? It is 25 rupees. All right, so this is how you will calculate contribution. Now, next is what? That is how many units you have to attain so to make your profit 2 lakh rupees. Now, so for this we have one formula, that is for required number of units we have fixed cost plus your desired level of profit which you want to achieve upon contribution per unit. Now, what is fixed cost? Fixed cost is 5 lakh rupees plus how much profit extra you need? You need 2 lakh. And how much is the contribution? We have calculated contribution 25. So it is 7 lakh upon 25. Calculate what is 7 lakh divided by 25. So it is 28,000. Means when you will make 28,000 units of goods or products, then you will make a profit of 2 lakh rupees. That is your 28,000 units. So how many units you have to sold? You have to sold 28,000 units in order to make profit of 2 lakh dollar. Yes, clear this question? Any doubt? All right. Yes, correct answer 28 units. Now, so this is all the solution provided to you. Next, question number 13. When selecting plant and equipment for manufacturing operation, which of the following factors will have the great impact on determining break-even point? The depreciation rate of the equipment, fixed operational cost, initial capital invested, or variability in the cost of raw material. To find the impact on break-even point, see, break-even point means what? That is no profit, no loss situation. It means you have to cover all your cost, your fixed cost plus variable cost. Now, variable cost, it will fluctuate. Sometimes it will increase, sometimes it will decrease according to how many units you are producing. But fixed cost, it remains constant throughout the year. So it's very important that you have to cover your fixed cost. If you have used your let's take an example 1 crore fixed cost, okay, uh, for installing machines, okay, for making the roof and floor, everything. So this is your fixed cost, electricity. So you have to cover, this is the impactful for the break even point. This fluctuate even if you're producing 1 units of good, then you need very less raw material. If you're producing 10,000 unit of goods, then only you need high raw material. So that is fixed operational cost associated with the equipment. Option 2. Now, in graphical representation, cost volume relationship, the point where total revenue intersect a total cost line, what that represents? Maximum profit, variable cost, break-even cost, or MOS. When TR intersects TS. So that is break-even point. See, this is this is your total cost. Now, why your total cost will never be zero? Can anyone tell me why your total cost is starting from this point, not from zero? Anyone? Yes, correct answer is break-even point. I'm asking one thing. Why your total cost is starting from here? It could start from here also, from zero level. Revenue is starting from here because initially you will not going to make any profit. Your revenue will be zero. But why total cost is not zero? Why it is starting from this point? Let's assume this is one. See, we know that total cost, it includes fixed cost plus variable cost. And fixed cost, it always have some value. If you're not producing, still you have to pay rent 20,000. If the rent is 20,000, still you have to pay the electricity cost. So that is fixed for the entire season, fixed for the throughout the life of the factory. So that is why fixed cost is never zero. It has some value. And if the fixed cost is having some value, then how total cost would be zero? Because total cost is the composition of fixed and variable. That is why TC starts from here, not from here. Yes, correct. Due to fixed cost. Now, when these two lines are intersecting, you can see this is break-even point. From above, the company is making profit, and below, the company is in the loss. So that is option 3. Now, next 15, not considered as PSL. So overdraft to PMJDY account holders limit 10,000. Yes. Loans to distressed person are given and it should not exceed 1 lakh per borrower. Means one borrower should be given 1 lakh rupees so that the borrower can repay their debts. So housing loan given to the staff of the bank is not considered as PSL. Now, again, two statements. Question number 16. Cash flow and fund flow statement. Cash flow, what it says, it is prepared to analyze the sources and application of funds. Is it so? The sources and application of funds are used in fund flow, no? Not in cash flow. It includes the cash inflow and outflow. Now, fund flow statement, it is prepared solely using income statement. Only income statement is used in preparing fund flow? No. Balance sheet is also used in preparing fund flow. It says it does not require balance sheet data. So this is wrong and this is also wrong. So both statements are incorrect. Now, 17. Under PSL, three statements are provided. Renewable energy projects are eligible up to 25 crore per borrower under PSL. Is it 25 crore? Individuals installing rooftop solar system cap is 10 lakh. Yes. And loans to microfinancial institutions would be provided for water and sanitation when they follow the RBI norms properly. This is also correct. But 35 crore per borrower is eligible, not up to 25 crore. Okay, so answer is provided, that is 2 and 3 are correct. So that is up to 35 crore per borrower. I guess I have not deleted the answers. Okay, 18. Every answer is given in 18th also. Three statements are there. Now, a loan becomes a doubtful asset after remaining standard for more than 12 months. See, when it becomes a doubtful, when the asset has been remained substandard for more than a period of 12 months. Means after 1 year, you will consider doubtful. Now, a loan with 65-day delay in interest payment is classified as SMA2. So we make three SMA account: 0, SMA1, SMA2. So in 0, that is 1 to 30 days, then 31 to 60 days, and 61 to 90 days. Now, a loan with 65 is coming under SMA2. Yes, so this is also correct. Now, a loss asset is one where the bank expect a partial recovery. So if the bank has considered the asset as loss, then how would bank can expect a partial recovery? So this is wrong. So answer C, 1 and 2 are correct. Now, next question number 19. Case study is given. What, 30 crore? This one, it's 35 crore. I've checked the RBI circular, it's 35 crore. Question number 19. A financial creditor initiates the CIRP process. Now, against a defaulting company under Section 7, the NCLT admits the application and declares what a moratorium as per Section 14. Now, during the CIRP, IRP is appointed and the IRP is allowed to check all the details of the company. IRP continues the essential supply of goods and services to preserve the corporate debtors' asset. So these are the things that are given IRP to do. Now, after 180 days, the committee of creditors is unable to finalize a resolution plan. And so the process is extended by 90 days. So when the committee of creditors will approve, then only it will move towards NCLT. And when NCLT approves, then the resolution plan is implemented. So here committee of creditors is not unable to finalize a resolution plan. So this process is extended by 90 days with the approval of majority of creditors. Now, which of the following statements are correct? Tell me. Just a minute. Okay. So what is the correct answer? That is all of the above. Answer D. Now next, which of the following is an incorrect statement with respect to co-acceptance of bill by the bank? You have to find the incorrect statement. And this is your previous year question. Incorrect statement. See, what is the co-acceptance of bills? Just now we have seen that two parties they have to sign, the bank and the buyer. Now, so these are the safeguards that are provided in co-acceptance of bill. Now, if we will see the second point, it says the bank should not extend their co-acceptance to house bill, accommodation bills by group concern or another. But in option this, it says that there is no restriction on bank to extend their co-acceptance. No, banks are not allowed to accept their co-acceptance. So this is an incorrect statement. All right. Now, and this is again, if the value is more than 10,000, then two officials will have to sign the bill. That is why it is said co-acceptance. Now, question number 21. Which of the following statement is not correct as regards reporting of SMA account to CRILC? Under Prudential Framework for Resolution of Stressed Assets. Now, what is the full form of CRILC? Central Repository of Information on Large Credits. Now, so if the bank they are preparing their SMA account, still they have to provide information to CRILC. So which of the following statements are not correct? You have to find the incorrect statement. So lenders shall recognize stress in loan account immediately on default as and when the due date arrives. And when the banks they have not recovered their dues, they have to recognize all their assets under SMA account 012. Yes, this is correct. Now lenders will have to report the credit information if the exposure is how much rupees 5 crore or more than that. So they have to provide all the details information to CRILC. Now, acrylic main report is submitted on a quarterly basis. No, this is wrong. It is not submitted on a quarterly basis. And lenders will submit a weekly report when the exposure is 5 crore and more. So option D is correct. Now, not correct, it was asked in the question. So that is C. Option C is incorrect statement. So it is not submitted quarterly. Rather, it is submitted monthly. 5 crore and above. Now, next question number 22. Okay, Amit sir, are you sure it's 30 crore for renewable energy? I'll check once. I've checked 2 months before the amount. Now, you have to find a new current ratio. Current assets are 50,000, liabilities are 25, ratio is 2:1. Now, from this question, three questions are put. Transaction 1, transaction 2, transaction 3. Now, transaction 1, what it says that if goods are purchased worth rupees 10,000 on credit. Now, if you will see this question, okay, if you are purchasing goods on credit, what is happening? Stock is also increasing with 10,000 and your liabilities are also increasing because you have to, after 1 month, after 2 months, after a few days, you have to pay off your liabilities. So your liabilities is also increasing 10,000. So current assets are also increased to 10,000 from 50 to 60 and current liabilities also from 25 to plus 10,000 that is 35,000. Now, current ratio is 2:1. It means as of now, it is idle for the company. But after considering transaction 1, what is your new current ratio? You have to find new current ratio after each transaction. Current assets by current liabilities. Now, new current asset is 60,000 and new current liabilities is 35,000. So, 60 divided by 35. So, that is 1.71. So where initially the current ratio was 2.2:1, now it is 1.71:1. So that is your new current ratio when you are considering this transaction 1. Now, similarly, transaction 2, what it says? It says that sells a fixed asset for 10,000 cash. Now, book value of asset was 8,000 and it was sold for 10,000 cash. Now, fixed assets are sold. So, fixed assets are sold. So, again, current asset is increasing by 10,000. Why? Because cash is coming. And here fixed assets are decreasing because it is being sold, not your current assets. So your current assets are increased over here. Now, new current assets. So in transaction one, what was your current asset? 60,000. Again, 10,000 is increased. So it is now 70,000. And in the question, there is no change in the liability. Liability is as it is. So in transaction one, what was your liability? 35,000. So 70,000 upon 35,000, 2 is to 1. Again, the idle current ratio, we got that 2 is to 1. Now, similarly, in transaction 3, pays of 5,000 of current liabilities means you are paying your liabilities. So your liabilities will be decreased. And because you are paying 5,000 in cash, so your current asset will also decrease. Both will decrease by 5,000. So current assets will also decrease. Current liabilities will also decrease. Now, new current asset was 70,000 and current liabilities was 35,000. So it is now 65 and 30. So now it is 2.7 is to 1. So it is also idle because idle current asset is what? Current ratio is 2 is to 1. Not less than, if it is less than, then it is not idle for the company. If it is 2 is to 1 or more than that, it is idle for the company. Alright, so this is how this question is solved. Any doubt to anyone in this question? Done? Now, next. Question number 23. Three statements are provided. Now, loan system for delivery says what? That borrowers whose working capital limit is equal to greater than 150 crore, they have to take how much loan component? Minimum 60%. It can increase 60%, but it should not decrease 60%. So, minimum 60% is required to take as loan component. Yes. Now, in this loan component, commercial paper investment by bank will also count as a loan component because if companies they are issuing the commercial paper and banks they are purchasing, so ultimately the money will be provided by the bank, the funds will be provided by the bank. So it is assumed that it is also a type of loan component. But export credit is included in loan component? No, it is not included in loan component. So 1 and 2 are correct and 3 is wrong. Option A. Now, question number 24. Now, external benchmark lending rate. 4 or 5 statements are provided. So, EBLR, it is an interest rate that is linked to an external benchmark. The bank does not have its own control. Correct. Now, under EBLR, changes in benchmark must be transmitted to borrowers quickly. Now, external benchmark can include bank's own cost of fund. No, bank's own cost of fund is not included in this external benchmark because we are calculating it externally. So it is not in our control. So according to market fluctuation, this interest is rate is decided. It improves transparency and different benchmarks are there. Repo rate, 3 month treasury bills, 6 month treasury bills, then FBIL. So these are all included. So statement 3 is incorrect. Rest all the statements are correct. Option A. Now, next. Question number 25. A corporate debtor is facing insolvency and for this the CIRP process is initiated. Now, the IRP issues a public announcement that if anyone wants to recover their money from this corporate debtor, they can come and join us. And the IRP will check all the claims, forms the committee of creditors. So again, a resolution plan is made and evaluated, and the one who is offering the highest value recovery, so they would be given that amount. But if creditors they are demanding that my okay, this company corporate debtor has taken 50 lakh. So the full amount is not provided to creditors because it is provided on a lump sum basis. So every creditor they have to every creditor has joined so that they can recover their dues. So if you will provide all the money to each and every creditor, so according to the liquidation value, the money, the rates are decided that how much to give to which creditor. The plan is approved by 75. So for this 75% approval is mandatory for committee of creditors. Now, so which of the following statements are true? Yes, it's all of the above. So at least 75% of the voting share is mandatory. Once NCLT approves the plan, then only it will move for the resolution plan, including all the corporate debtors and creditors. The creditors they have to accept a significant reduction. So not full amount will be provided. A significant reduction will be there on their claims, and that is known as haircut. So option D is the correct answer, all of the above. All right. Now, next, what are the objectives of credit audit? This is previous year question. Review sanction process and compliance status of large loans. Yes. In this independent review is done, CRM, credit risk management, and with three factors, IAM, identification, risk assessment, and risk mitigation. Now, early warning signals are when early warning signals are given, then after that remedial measures are taken. Periodic audit and re-verification of title deeds other than documents when the credit exposure is 5 crore, more than 5 crore, it is required. The title deed is required. Yes, it is required, but this is not the part of credit audit. This is the part of credit control and monitoring. Or loan review mechanism, LRM. So 3 are correct and 4 is not correct. So option C. Okay, so this is the part of credit monitoring or LRM. Again, PYQ, question number 27. What are the legal components encompassed within IBC Code 2016? So NCLT is there, DRT is there, DRAT is there. Now, if one is not satisfied with NCLT, then the creditors they can move towards NCLAT, that is National Company Law Appellate Tribunal. So 1, 2, 3 are correct. High Court is not the part. So B. Yes, correct. It's B. Okay. Now, question number 28. At the time of financing projects, now bank they will adopt which following methodology as far as determining the levels of promoters equity is concerned. So when bank is providing funds for financing the promoter's equity. So which method bank will choose? Okay, D, to have given the answer D. Yes, it could be any one of the method. Now, what is the first, second, third method says? Promoters bring the entire contribution upfront. Like promoters have to bring, let's take it 10 lakh rupees, and bank is giving 20 lakh. Now, so promoters, they have to bring the entire amount before bank will give 20 lakh rupees. Now, promoters, they can bring their equity 40 to 50% upfront, means from 10 lakh, promoters are required to bring 40 to 50. Okay, 3 to 5 lakh rupees. And after that, rest of the 5 lakh rupees, the promoters can bring in stages. That is the second point. Now, third is ab initio, they will bring in proportionately, means like if promoter is bringing 10% of the amount, bank will provide 10%. Promoter is bringing 15%, bank will provide 15%. 20-20. So means it is in the proportion, equal proportion. So any of the one method can be adopted by the bank in providing finance. Okay, some fill in the blank question are there. Question number 29. Four questions are there. A borrower becomes a specified borrower when then NAC committee, then we have single bank exposure to single counterparty, and in fund flow statement. Give me your answers. Now, so a borrower becomes a specified borrower when ASCL exceeds how much crore after April 2019? It is 10,000. Now, under NAC committee, working capital is assessed at 20%. Bank exposure to a single non-NBFC counterparty is capped at 20% of Tier 1, and if a group of borrowers are there, then it is 25%. So group of borrower, it is 25%. Now, fund flow increase in working capital is treated as use of funds. So these are all the four options. All right, 10 crore. Yes. Now, question number 30. A manufacturing MSE project's annual turnover is rupees 12 crore. Now, its operating cycle based working capital requirement is computed as 2.1 crore. Now, as per RBI, what is the sanctioned working capital limit? So, project annual turnover is 12 crore. Now, what is the 20% of projected annual turnover? 20% of 12 crore is 2.4 crore. Now, 20% of PAT 2.4 crore, operating cycle 2.1 crore, higher of these two, higher of PAT. and operating cycle or fixed 25% of the turnover. So in this 25%, 20% bank will give and 5% the enterprise will bring. So what is the answer of question number 30? It is higher of A and B. Okay. So higher is for 2.4. So that is 2.4 up to 5 crore. Yes, correct. It's C. Now, next 31. So any shift if done in DCCO is by default treated as restructuring and leads to asset classification. Yes, when the time period is allotted. After that, if you need more time period for the commencement of operation, then it would be treated as restructuring. Now, for infrastructure project, delay up to 12 months can be allowed without classifying it as restructuring if no other loan terms change. Yes. But for non-infrastructure project, only 6 months DCCO is delay is allowed. No, 1 year delay is allowed. So T plus 1 and change in DCCO with extension of repayment period will beyond proportionate delay is always restructuring is. So statement 3 is wrong. 1, 2, and 4 are correct. Okay, so it is T plus 1 is given, that is 1 year delay is allowed, not 6 months. And for infrastructure project, T plus 2 means 2 years delay are allowed. Now, 32. So, independent credit evaluation is mandatory for resolution plans involving restructuring where aggregate exposure is greater than equal to 100 crore, exposure greater than equal to 500 crore, then independent evaluation is done, two independent credit evaluation. It is acceptable only if ICE rating is RP4 or worse. Now RP4 or greater than that, it is considered as worse. So the resolution plan is acceptable? No, it is not acceptable if rating is less, if rating is worse. If lenders obtain more ICEs than needed, every IC must be RP4 or better. So RP4, RP5 is what? It is considered as worse. Now, what should be the correct answer? So statement 1 is correct, that exposure is greater than equal to 100 crore. Statement 2 is correct. Statement 3 is wrong and 4 is correct. So this one incorrect. So it is allowed only if rating is RP4 or better. So from RP1 to RP4 it is better and RP5 it comes under worse. So it is not acceptable. So these are what? These are the ratings. Now next 33. Four statements are provided. So SMA2 category indicates a delay of more than 60 days but less than equal to 90 days. Yes, last is what? Last is the account of SMA2. So that is 61 to 90 days, correct. Now, substandard asset which has been remained NPA for less than or equal to 12 months. After the review period of 30 days, then lenders they will get 180 days to implement the resolution plan. So review period 30 days is provided and for implementing the resolution plan 180 days are provided. If in within 180 days the RP is not implemented, then additional provisions are required. So all the four statements are correct. Now, question number 34. Now, the credit rating of borrower has been dropped from double A to triple B. After the bank has sanctioned, now bank has sanctioned a large loan. After that, bank saw that the credit rating of borrower there is a drop of credit rating in the borrower company. Now, bank faces a new type of risk. Now, what type of risk is known this? If the credit rating drops, then this will come under which type of risk? Spread risk, concentration, recovery, or downgrade risk. So it's a downgrade risk because the credit rating has been downgraded from double A to triple B. So we have different types of risk. In external environment, that is known as also portfolio risk. So we have concentration industry risk. Then in internal environment, also known as transaction risk, we have these four types of risk. Now, concentration risk, everyone knows what is concentration. When bank is lending amount to only one single sector, bank has given too much loan to one single sector, and if this single sector makes any kind of default, then the large amount the bank will have to face loss. So too much loan given to one borrower, if it fails, the big loss is there. Industry means when the whole industry is facing the same type of problem. So and so too the borrowers will also face. Now in internal environment default risk, it comes when the borrower is not in a position to repay its loan. Spread risk is what when there is changes in the interest rate, and with this the bank has suffered a huge loss. Downgrade is when borrower's credit rating goes down, and recovery risk is what? That is when the already see bank has made provisions under SMA account. After that, when NPA arrives, then now the bank bank was expecting that I will recover the money, okay, a few small sum of money, but still the bank has not recovered. So not get full money after a loan goes bad, that is recovery risk. So the chance the bank has expected that this much amount bank will going to recover, if bank is not recovering that, so it will come under recovery risk. Now last question. So willful default. Now who is willful defaulter? Who is willful defaulter? Now willful defaulter means a person who has money, okay, who has money, but still that person is not paying his debts. Still that person is not paying his dues. So that is known as the willful defaulter. Means intentional or deliberate action is there. Then the person will be said as willful defaulter. So it means the borrower fails to repay due to reason beyond their control. If the reason is beyond their control, then that will not come under willful defaulter. If the deliberate action is there, intentionally the borrower is not repaying the money, that will come under willful defaulter. This is wrong. Now, diversion and siphoning, these are the two terms. Now, diversion means you are diverting your funds. You have taken for the purpose of infrastructure project, long-term purpose, and you are using that money in short-term purpose. Okay, or you have purchased the shares of any company without letting know to the buyer, or you have disposed of all your assets without the knowledge of lender. So these are what? These are the diversion of funds. Now, these are diversion of funds are still acceptable, but siphoning of funds are not acceptable. It means you are using the funds for any illegal purpose, like betting, then speculation, arbitrage. For all this purpose you are using for your personal purpose, for unrelated purpose. So diversion of funds refers to using borrowed funds for the purpose other than sanctioned ones, yes. And siphoning of funds when you are using the purpose in a misused manner in a legal for any legal activity for personal activity, that is called siphoning of funds. Now RBI allows restructuring of loans with backdated effect. No, not with backdated effect. So two and three are correct. One and four are wrong. Okay. So yes, B is the correct answer now. So we have done 35 questions of module C also. And I'll check that 30 crore. If you are saying it's 30 crore renewable energy, so I'll check and I'll revert you tomorrow. So tomorrow we have the session of module D. All right. Any doubt, any confusion so far, except that question, renewable energy one? Okay, all right. Okay, done. So these are all the questions so far for your module C. And the questions which are highlighted with red color, so either it is in module B, C, D, so those are your previous year questions. So go through them again. Okay, so if you feel sessions are helpful, you can like the session, share it with others as well. Do subscribe the channel Oliveboard JIB CIB. This is Hindi medium channel. Okay, so English medium we have JIB, CIB, English medium channel. And do comment if you have any doubt, any confusion. And let's meet you at 7 p.m. in the evening. So we'll continue module C and we'll start module D in our capsule batch. Okay, so 2:30 or 2 hour 45-minute session is there. So do join this session. Chalo. So bye bye everyone. Take good care of yourselves. Okay, let's meet you at 7 p.m. in the evening. All right, bye bye everyone.